Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Ron Suber, who's the president of US peer-to-peer lender Prosper. Ron, first of all, welcome to New Zealand.
Thank you.
Can you tell us what you're doing here?
So my daughter, who is a junior in college in the United States, is having a semester abroad here in Dunedin in the south of the South Island. So my wife Karen and I just arrived today to this beautiful country, and we're excited to be here.
Okay, and bringing the message of peer-to-peer lending with you. I mean, you've told me off camera how you travel around the US as a bit of an advocate for peer-to-peer lending. Obviously, you're well aware in New Zealand that our first licensed peer-to-peer lender, Harmony, has just launched recently. So what's the message you bring to New Zealand about peer-to-peer lending?
So we're bringing a message not just to North America and not just here to New Zealand, but to all continents and all countries about the mutual benefits and the opportunities for investors, both retail and institutions, to participate in these online marketplaces for credit. And at the same time for the borrowers, those people looking to debt consolidate at a lower rate and at a fixed rate and get out of debt and improve their personal credit. We're looking to educate people that there are new ways to borrow, that credit cards might be a good way for a point-of-sale transaction, but they're a terrible place to borrow money. So our platforms, Harmony, Lending Club, Prosper, can help people do home improvement and borrow money, vacations, special occasions, medical procedures, and lots of other large purchase opportunities. And finally, individuals who want to borrow on their personal credit for their small business can often now come to these platforms and help their businesses and help keep unemployment low in all of these countries, because we now have peer-to-peer and marketplace lending and online marketplaces for credit helping people in those three areas to borrow and people and institutions to invest and lend and get interest, short duration monthly paying interest, where they never could before.
So Prosper's been around since 2006. I think you've lent north of $1 billion now, heading towards $2 billion. What lessons have you learnt, I guess, in the time in that 7 or 8 years that would be useful for people in New Zealand who are interested in peer-to-peer lending to, I guess, take on board?
Yeah, I think there's lots of lessons to be learned. We've seen many platforms launch and fail or fail to launch. It took Prosper 8 years to do $1 billion in aggregate business, which was February of 2014. It will now take 8 months to do its second $1 billion, which will be roughly the early part of November. And I think the lessons really start with the most important part of the company, which is the pricing and credit model. It's that engine that determines what interest rates, what term, and what dollars are appropriate for each borrower. And then it's to tell the story, to find the borrowers, to help them understand these platforms are here, and then to match the platform with investors so that we have a nice balance, a matched book between the right borrowers and the right investors in a pricing credit model that works. And then to have a servicing engine to make sure that the money moves every month from borrowers to lenders and vice versa. And then if something happens to the platforms, having some kind of bankruptcy remote special purpose vehicle with a backup servicer so that there's more trust and transparency between the borrowers and the investors.
Now, in the first couple of years, Prosper had some problems. Obviously, there was a lawsuit, a class action lawsuit that was settled, and there was a high default rate, I think north of 30% at one time there. What lessons did you learn from that, and how did the business change after that period? Because obviously in recent times you've been very successful.
So my partners and I, Aaron, Steve and I, and Sequoia Capital came to Prosper in January of 2013. And we really changed a lot of things that the prior management team had done. Included in that, in the earliest versions of Prosper, the investors bid against each other to set interest rates. And that clearly wasn't something that was working in the old Prosper. And so we clearly set very clear and defined pricing and credit terms and really iterated the credit model so that it would work better for everybody, both borrowers and investors. And we really went after a different, higher prime group of borrowers. So our average FICO score is now 705, and the average income of our borrowers is $80,000. And these are the right borrowers coming to our platform, where we're now rejecting almost 80% of the borrowers who come to us that don't fit for the new Prosper model. And we've also introduced some institutions to the platform so that a healthy blend of retail and institutions help keep the Prosper platform working smoothly, and which is why we've gone from $9 million a month in monthly originations to over $170 million this month in originations.
That's very fast growth, isn't it? And how are the banks in the US reacting to peer-to-peer lending now? I mean, do you have them investing money through your platform?
So many banks are starting to realize, not just in North America, but around the world, that these online marketplaces for credit really can help the bank's customers. Often banks don't want to do loans under $35,000, and they can use us to do the work, to do the credit, to do the processing, and then banks can come in and buy loans, and many do, primarily the top level, the AA and A, to hold on the bank's balance sheets. So banks can put their capital to work, increase the yield on the bank's balance sheet, and own consumer credit without having to do all the work.
And obviously Lending Club is one of the other big US peer-to-peer lenders. We're hearing a lot about their plans for an initial public offering. Is that a route Prosper might go down too?
So Prosper hasn't decided exactly what it's going to do in the future. We have lots of different options, including staying just the way we are. So we are a profitable, fast-growing, in fact, as fast as Lending Club's growing, we're going twice as fast as they are. And we have lots of people who call us with all kind of different ideas, but we're very, very focused on growing a quality, profitable business that really works for both sides, the investors and the borrowers. I think one of the key things is you can think about Harmony and Lending Club and Prosper as companies like Uber and Airbnb, introducing one group who wants something, perhaps a driver who wants to drive people, and a passenger on the other side who wants to get a ride. And so with trust and transparency and education and awareness and understanding of the mutual benefits, you see firms grow like Airbnb, like Uber, like Harmony, and like Prosper. It's a very exciting time.
Now, obviously, we've had a situation in the world, especially in the US, in the last few years after the global financial crisis of zero or near zero official interest rates, quantitative easing, money printing. The Federal Reserve is indicating that this is coming to an end. The market's expecting them to actually start increasing interest rates sometime next year. Mm-hmm. What sort of impact do you think this could have on peer-to-peer lending?
So I think the best platforms will iterate, and they'll iterate across lots of different factors. So we're very prepared for rates to go up when and if they do. And in many cases, the rise of the risk-free rate or the LIBOR or the Fed funds rates might be a good thing for these platforms, as more borrowers will not pay off early, and so that the investors will have their money to work for longer. We see lots of prepayment across many of the platforms today. So as the pricing models iterate and go up, and as the credit cards and banks iterate and go up, we're ready for that as platforms. And I think you'll see the investors even more happy given fewer prepayments of the loans they've invested in already.
And what sort of default rates are you seeing on loans at the moment?
So on our website, we file with the SEC all of our returns, the gross returns, the estimated defaults, all the fees, and the expected net returns. So there's different defaults at each of the different loan grades, AA, A, B, C, D, E, and HR. But in general, the investors are getting 6.8% net of all defaults and net of all fees if they'd index the whole platform at this time.
Now, we're hearing in New Zealand about the areas that peer-to-peer lending is going to target in terms of on the borrowing side, personal loans, also debt consolidation are two of the things we hear about, and small business lending as well. Are there other areas in the US now that I guess the more mature peer-to-peer lenders are looking to push into or are pushing into?
There sure are. There's really four main areas today. Real estate. There almost isn't a week that goes by that you don't see a new real estate platform combining equity and or debt financing in a peer-to-peer marketplace lending for real estate. Realty Mogul, Patch of Land, Asset Avenue, and many, many more. You also see it in the student loan business. With $1.2 trillion of student loan balances outstanding, you see high growth firms in these online marketplaces like Common Bond and SoFi growing to help those students and help investors help those students. Clearly on the consumer side with Lending Club and Prosper growing very, very fast. And then you see it a lot on the small business side with OnDeck and many, many other firms getting into this small business or SMB online marketplace for credit peer-to-peer lending. It's a very crowded vertical at this time.
So over time in New Zealand, we can perhaps expect to see some of this too?
I think you're not only going to see those verticals, but you're going to see others like insurance and mortgages and other things that we did differently that our children and the platforms like Prosper and Harmony will be adding other products to diversify and help more and more consumers in addition to consumer finance.
Well, thanks a lot for that, Ron. That's Ron Suber, who's the president of Prosper, and I'm Gareth Vaughan at interest.co.nz.